Hello, my name is Candis Fitch, Portfolio Manager at TriCert Investment Council, and welcome to this episode of InFocus. Today I'm joined by fellow Portfolio Manager Grayson Waechter, who covers our energy sector. Welcome, Grayson.
Thanks, Candis. Happy to be here.
So, Grayson, let's chat a little bit of energy in the future. Can you tell us what that looks like in terms of what are the sectors and subsectors that go into that, and what kind of materials get pulled out of the ground to create energy?
Yeah, absolutely. So today I'd like to talk about 3 ways that TriCert invests in some of the energies of the future. The first one has been in the news a lot, and that's uranium. So we have a company that we invest in called Camco, and they sell uranium. So to give our listeners a little bit of a background on what's been going through the uranium industry, back in the early 2010s, when we had the Fukushima nuclear disaster, which was one of those unfortunate events with energy, it caused the uranium prices to go low for a very long time. Since then, we've seen some energy security issues, especially with regards to where the electricity is being produced from Russia, as well as their natural gas that supplies a lot of electricity to Europe. And we've seen demand for uranium go back up, as well as, global warming being in the news a lot more. How do we create energy efficiently without a lot of CO2 emissions? So this has kind of sparked a renewal of interest in nuclear power, and with nuclear power comes more demand for a safe, reliable source for uranium. So just a little bit of facts on nuclear power for our listeners. About 9% of the world energy is created from nuclear power. There's over 440 nuclear reactors in the world, and we're seeing more demand for creating new ones. So we've got another 60 reactors that are in the construction process, and then another 110 that are in the planning phase. So all of these reactors are going to need a safe supply of uranium to be able to produce electricity as well. And that's where our company Camco steps in. So they are a Canadian company that produces uranium. They do it in Canada, and they do have some sources throughout the world as well. They are on the U.S. list of trusted uranium suppliers, so they can actually contribute to the U.S. strategic reserves of uranium as well. And where we look at it is we see strong growth for the price of uranium going forward. Now, we have had some clients kind of reach out and say they want to play the uranium game. And with them, we do have to put a little bit of reasonable expectations when it comes to Camco. So what they do is they sign very long contracts for the uranium supply. So they've been selling long contracts for the last 10 years. And those contract prices are starting to go up, but they're not as high as, let's say, the spot price of uranium is, which, is trading at a very, very high price. So we like the companies of long-term play in uranium. So as time goes on, they're going to be signing more long-term contracts. And the best thing about that is uranium is not really a scarce resource. It's just one that you want to have a secure, stable supplier for your facilities. So with regards to, Camco, if we were ever to see a decrease in the price of uranium, they would have at least long-term contracts locked in. So we absolutely like, Camco and uranium, but we're making sure that when we put it in clients' portfolios, we're doing it smart, and we're not necessarily investing into the hype. We want to make sure that we can justify the price that we pay for it.
Fair. So you chatted a little bit about the long-term prospect of, these long-term contracts, and the spot price is currently higher than maybe it was previously when they created these long-term contracts. Does that mean that we might see and experience some volatility or turbulence in the short term?
Yeah, absolutely. So, essentially the price of uranium went from the low about mid-30s, low 40s, all the way up to over $100. It's since then come down to about the 80 range. The long-term pricing that we've seen, it was a little bit more stable than that over that period of time. So it's been steadily edging up, and it's about $75 right now is if you want to buy a long-term contract to supply uranium. So we're seeing a lot of volatility in the spot price uranium, and sometimes the stock trades on that hype. But what we're more concerned about is the long-term price of uranium that we're able to lock clients in at that price, because that's ultimately what's going to reflect the balance sheet and the earning statements of the company.
Right. I guess this is a good plug for our tagline. We are investors, not traders. So thanks, Grayson, for clarifying that. What's the next energy of the future?
So the next energy of the future, we've heard a lot about electric cars, but when we're looking at providing electricity as well as energy, especially for large commercial companies, you're talking fleets of vehicles, transport trucks, is hydrogen. So one of the ways that we play hydrogen is we invest in a company called Air Products. They do two things. They sell industrial gases, and then they also sell hydrogen. And the way they're looking to position themselves is essentially as being the green hydrogen of the future. So the way hydrogen typically works is you take an energy source and you take your water and carbon dioxide, and you're able to create hydrogen out of it. So traditionally what they would create, and this is what's out in the industry, is something called gray hydrogen. So their energy source would be coal, and then they would create hydrogen out of that. Not the most environmentally friendly. And then what Air Products has done is they originally were one of the pioneers of what they called blue hydrogen. So what they would do is they would use something a little bit better for the environment, natural gas, and then they would use that as their energy source. And then they would carbon capture all of the byproducts in the production, and they would basically carbon capture and sequester that. And then they were able to sell it as a more environmentally friendly product. And now the new product that they're in production on, and this will really be a driver for the company going forward, is essentially what we call green hydrogen. And that's taking that energy source and using renewables as your energy source, carbon capturing any of the byproducts off, and then having a truly green product that they can export to the world. And there's a few catalysts on why somebody may want to pay for this green product over the others. And a lot of it has to do with environmental regulations. So, for an example, starting next year, any ship docking or in a European port, anything from the European Union, regardless of the country it came from or the country it's going to, if it's docked in a port, it needs to pay a tax based on the pollution of that ship. So with sources like green hydrogen, that's a way for those companies to reduce their cost. And we're seeing a good amount of government credits as well, helping these companies be able to purchase some of that green hydrogen as well to make that transition a little bit more seamless. And Air Products is one of our favorite plays on how to capture some of that green hydrogen market going forward.
Awesome. I think a lot of times when clients, just for a quick reminder for everybody, our resources sector is made up of oil and gas, gold, and materials. And a lot of the times we just associate resources with oil and gas, and then we automatically think that it's not environmentally friendly. But what you're saying is we do have options to kind of sidestep into that green play if clients are interested in a little bit more, sustainability and environmental friendliness.
Absolutely. And the unique thing about those two companies is they're actually not on the oil and energy side. They're technically on the materials side. But as we start converting over and looking at other alternatives to oil, as well as the amount of electricity we're going to be using as we electrify and use that as a replacement, the materials industry becomes a lot more intertwined with that energy aspect of producing that electricity.
Very interesting. Now, what about oil in general? We can't really talk about energy without talking a little bit about oil and gas. So what's going on in the oil market?
Yeah, so that was the third way that we play the energy market is traditional oil and gas. And the big surprise, it isn't a surprise, is that's really going nowhere for now. So the question is, how do those companies, what are they doing about the environmental consequences of their business? And the one thing that they've put a fair amount of money into and that they're looking forward, how they position their industry going forward is carbon capture. So as they're producing their gases, refining the oil, are they able to capture all that carbon and sequester it under the earth? So one of the things that we're seeing is a lot of companies that are in the pipeline industry are now creating these big pipeline networks for sequestering of carbon as well. So when we look at the oil companies, we're seeing a good amount of investing in that. And the nice thing is we have a reasonably high price in oil too, so they can afford to be doing that right now as well. And that's nice to see. And when we're looking at the earnings, we're also looking at the environmental consequences of the companies, as well as their plan for mitigating that going forward. And a lot of that has to do with what type of sophisticated carbon capture network are they setting up for their operations so that they can take a lot of that pollution and put it underground where it's not having as much of an environmental impact.
Very interesting topic today, Grayson. I think, well, I learned a lot. I hope our listeners did too, in terms of what's, coming in the future for energy. So thank you so much for chatting with me today. And of course, if anybody has any questions, feel free to reach out to your financial advisor. You can reach out to Grayson or myself or your TriCert Investment Council Portfolio Manager.
Thanks, Candis.